Hello, good evening. Welcome to the webinar for about renewal and refinancing. My name is Boris Sapozhnikov, and I will be happy to provide you with information, updated information about mortgage renewal and mortgage refinancing. This information is made available as a helpful tool for your independent use and is not intended to provide investment advice. I cannot and don't guarantee the applicability or accuracy regarding your circumstances. I encourage you to seek personalized advice, and here is my link. So if you would like to have a personalized advice, just contact me via this link and we will discuss your personal circumstances and I will be able to give you a personalized advice. So mortgage renewal facts. A mortgage renewal is when your current term comes to an end and you sign for a new term. Mortgage loan providers depend on the fact that the majority of homeowners are too busy. Yes, we are busy. We are working, we have children, we have families, we have some kind of plans. So we don't really remember our mortgage renewal date, and when it comes, it always surprise for us. So my main advice, remember your mortgage renewal date. Put it in your calendar and put in your calendar reminder about like 5 months before renewal date to speak to somebody and look what is going on the market. Yes, like 5 months, even half year in advance before your renewal date, you can start shopping around, look around and see what is going on. The regular recommendation before renewal to shop around 4 months before renewal, but you can start as early as half year before renewal. So when you renewing your mortgage, you can renew with your current lender and it will be really easy process. But it's not guaranteed that you will get the best product, best rate, and it's always good to try and shop around. So sometimes clients say me, but it's a lot of paperwork to again ask for employment letter and ask for pay stubs and collect information about the home where you live. So it's again application and a lot of paperwork. So is it worth it? And this is the main question. Is it worth to shop around? Is it worth during the renewal process look around? Maybe it's just renew with your current lender and see what happened. So let's look on the example. By the way, we have a chat here. So if you will have any questions, I will regularly check if anybody on the chat asking questions. And if I will see any questions, I will stop and I will answer on the questions on the chat. Okay? So let's see an example and see is it worth renew mortgage. So here is the living example. The balance on the mortgage was $400,000 and offered mortgage rate 5.559, 5 years fixed, was from one of the big lenders. And I will say it's relatively good interest rate in today's market. And maybe it's much more easy just renew mortgage with the current lender and forget. So I checked what rate I can provide and my rate was 5.14. So monthly mortgage payments a little bit lower and difference $98.60 monthly. So what usually average homeowner thinking? Okay, if my saving on payment 98.60, so 98.60 times 5 years, if I'm taking mortgage for 5 years, times 12 months, so in total times 60 months, so it will be kind of almost $6,000 saving, $5,916 in this case. Unfortunately, it's wrong because if you just calculate a difference on payments, you are not actually calculating a real savings. And here I would like to provide more details about what is actually savings in this scenario. So again, banks say that they will give 5.59% for 5 years. So at the end of the 5 years term, a new mortgage balance will be $336,903, and total interest will be paid for 5 years, $102,348. My interest rate a little bit lower, 5.14, but balance at the end of 5 years term will be lower, $334,329, and interest paid will be lower, $93,858. So basically, we have here difference in the balance. So we are winning $2,574 in equity of the home. Also, we are winning $8,490 on interest. So actually saving for this specific family is more than $11,000. Again, if I will go back, it was only $98.60 difference in monthly payments. And family believes that we'll save maybe only $6,000, and they were not sure. Even $6,000, it's still money that it's good, but real savings is much more higher, is more than $11,000. So when it comes to the renewal time, it's very important to speak to somebody who can calculate and compare and check available mortgage for you. So how is it usually done? It's very simple. You just give a phone call. For example, you can give a phone call to me, and it will take maybe 15-20 minutes. You quickly will let me know what you're doing, what you're working, what are offered mortgage rate, what is the balance. I will calculate. It may take me maximum 15-20 minutes, and I will be able to let you know if realistically we can save any money here. And if realistically you can save something like $10,000, even $5,000, I believe it worth to collect all papers, go to your employer, ask for a new employment letters, collect whatever information required and reapply. Because how many hours it will take from you or your family to collect all papers? Let's say 10 hours, and let's say you save $10,000. So basically you're saving per 1 hour of your time, you're saving $1,000. I believe it's worth it. Even if you need to take a day off from your job, of course, if you make about $1,000 per day, it's maybe not worth you. But if you are a kind of average Canadian, I believe it's worth for you to save even $5,000, even $500 per 1 hour of your time when you need to collect all papers, submit it to the broker, and broker will find a better rate for you, and you will save money on renewal. This is basically what is going on during the renewal time. I'm going to quickly check a chat. Okay, I don't see any questions on chat right now. Again, if you have, if everything clear, no problem. If you have very personalized question and you don't want to put on chat, no problem. You can use a link that was provided. I will provide this link again and again during this video, and just ask your personalized question. But if you have kind of general question, I recommend to use the chat and ask a question during the chat. Okay, let's go next step. So how to get these best rates? So first of all, you need to start to shop around early. More than 120 days, as I said earlier, more than 4 months. To start 6 months in advance, 5 months in advance, at least 4 months in advance. You need to check your credit score and credit history regularly to make sure that it's in the best condition, so you will get the best rate. You need to check what is your employment type, what is your employment income. You need to speak to the broker, and we can see what type of mortgage can fit for you. It depends, interest rate also depends by loan size. The more money you borrow, the lower rate can be available. It also depends by what is your current home value. Sometimes we need to order appraisal, but in majority cases, it's not required. Loan to value. So how much money you still owing compared to the price of your home. What is your debt ratios? Debt ratios is usually standard 32-40 or 39-44. This is debt ratios mean how much you make compared to how much you want to borrow. Length of term. You can take mortgage for 1 year, 2 years, 3 years, 4 years, 5 years, 7 years, 10 years. So different lengths of term, different mortgage rates available. Depends if you want mortgage for 5 years or you want mortgage with amortization for 20, 25 or 35 years. Depends by amortization, your interest rate will be different. It depends if this home is owner occupied or maybe it's your second home. By the way, I have lenders that providing very good rates for the second homes, or it's a rental. It's also depending by province where home located, or it's even at the same town or city. It depends in what part of the town or city is your home located, or condo or townhouse, whatever property do you have. It depends what type of mortgage do you want. If do you want standard mortgage, you want readvanceable mortgage, or any other type of mortgage. We can discuss and see. It's a perfect time on renewal to discuss your future financial goals, and based on these goals to decide maybe you need to go from standard mortgage to more advanced mortgage such as step mortgage or all-in-one mortgage, any type of mortgage or any other type of mortgage. And the last thing is the most probably important thing that influence interest rates: availability to buy down the interest rate. Bank will provide you whatever rates available in the bank, but mortgage broker can access lower rates by buying them down. House brokers doing this? They're using part of their compensation to buy your rates. Not every broker available to do this. Not every broker willing to do this. I am more than happy to do this for you. So please contact and let's see what is the options available. What are our options available? Okay, so again, what are steps for mortgage renewal? Start as early as possible. Contact your current bank lender. Let them know that you are going to shop around. Get offer. Why you should let them know that you're going to shop around? So they will give you the best offer possible. Just you call in your bank, say, for example, you call into the bank A and say, hi bank A, my name is, for example, my name is Boris. So, hi bank A, my name is Boris. My mortgage coming to the renewal. What is the best rate you can give me? Bank say, for example, 5.5. And you say, okay, I'm going to shop around. Maybe you can consider some maybe better rate. And they may call you day or two after and say, yeah, we can offer you the best what we can, 5.4. So after this, you contact your mortgage broker. In this case, you can contact me. Here is a link, link3ee Boris S. Just type it in web browser. You will have all information there. You contact me and say, okay, Boris, I renewal. This is what my rate from the bank. This is the best what they can do for me. Please help. Maybe you can do better. And almost always I'm available or available, like in majority of the cases when client call me, if everything okay, if he is still employed and has a decent job and his income is okay and everything good, usually it's not a difficult or it's not a problem to find much better rates that bank can propose. or current bank can propose. Several tips here. So when you're renewing, think about your financial goals. As I said, you may decide to switch from one type of mortgage to another type of mortgage. Shop early again and again. I'm repeating this is very important. You need to ask for better mortgage rate. Rate can be held for 120, 90 or 45 days. Usually the best rates available 45 days prior possession or renewal, but it's also 90 and 120 days prior. A lot of different rates can be available, and prepare documents up front. Whatever documents you have can be useful. Even basic documents like your mortgage statement, like you definitely should receive a mortgage statement. Some banks giving statement every month, some banks giving once in a year. So we are close to the end of the year, you probably will get a new mortgage statement soon, so you will be able to see what is your balance. It's important document that mortgage broker can use to get you a better rate for better renewal option. Okay, before I'm starting here the refinancing, before I'm starting to speak about refinancing, I am double check. Okay, here is a question, but this calculation will work only for fixed. Thank you very much for your question. This calculation was done for fixed rate mortgages, yes, as an example, but it's not a problem. I can give you a calculation for variable rate mortgages. How can I do a variable mortgage rate estimate? We can put any scenario, whatever scenario. For example, if we can start with any variable rate, whatever rate you have right now, and we can put scenarios that, let's say, mortgage rates will increase up to, let's say, today we have Bank of Canada 5.95. Let's say they will go up until 8 and go down until 7. We can put this scenario and we can calculate if it's a good option for you. So variable rate mortgages can be estimated exactly like a fixed rate mortgages. And again, I'm asking, like you asked me a question about why I'm not calculating variable rate mortgages. Because let's see, I will give you an example. Let's say you got a prime in your bank, prime 5.95. Let's say you will get even discount in your bank 0.9. Okay, so current rate 5.95, you got discount prime minus 0.9, so your current rate 5.05. Okay, you will ask me if I can get something better for you. I'm shopping around, and let's say that if I will find instead 0.9, 1.1. Okay, so my prime will be prime minus 1.1. So a difference between your discount that you got with your current lender and my discount is 0.2. So basically, even if rates will go up and down and up and down and up and down, my mortgage, because it has more discount, I will save more on interest and I will finish with lower amount on my equity than you, because my discount is better. So again, if you saw, like it was example for fixed rate mortgages, but if you prefer variable and your current bank give you variable and you're looking for better variable discount, I can also look for these options. By the way, many people, when they not on renewal, when they're in the middle of the term, they can switch from one variable rate mortgage to another variable rate mortgage. And why sometimes it's convenient? Sometimes it's convenient because another lender may give you better discount from the prime. And if you will go to any big bank today, a discount from prime is not really big, it's just 0.15, 0.2. What do I mean by this? So you will get 5.8, you maybe will get 5.75 variable rate with one of the big banks, or maybe you will get even better, but you will never get prime minus 1. Okay, but I have lenders that can give prime -1, and it's not a problem. Okay, so again, yes, my examples for the fixed rate, but it also will work very similar way for the variable rates. And if you prefer variable rates, you need to shop around and look for bigger discount for variable rate. If you will have more questions, you are more than welcome to ask, and I'm starting refinancing. Okay, so refinancing. What is refinancing? Refinancing is the process of replacing an existing mortgage with a new loan. So refinancing is more aggressive way. Refinancing can be done anytime. You can break your mortgage and do refinancing. Refinancing can be done also at the time of renewal. And when we are doing refinancing, we are doing really big change for the mortgage. For example, you had amortization 20 years. We can stretch it to 35 years. Why we are doing this? Because like in today's market, interest rate is very high. So for one family to continue to pay with amortization 20 years, it's mean to have a big monthly payments. So family wants, it's hard to pay big monthly payments. They want to save. So what I can do, I can stretch a mortgage to 35 years instead of 20. And during the next 5 years to pay less monthly because interest rates is high. And after this, we can, when it will come to renewal and hopefully interest rate will go down, we can again change amortization from 30 years to 20 years, 15 years. So refinancing is when we drastically want to do a huge change with the mortgage. We want to change many things, like how many years we are going to pay. We can change, we can re-borrow money. Yes, let's say you paid down your mortgage and you decided to re-borrow money. Take this money back from your equity. Yes, you can. You can do this through the refinancing. You can re-borrow money and buy out other loans. You can re-borrow money and buy another property. A lot of people using refinancing for investments. Yeah, so they using money from one property to buy another property. And all options available. So what is the main difference between refinancing and renewal? Renewal, we are waiting when the term ends. We are leaving mortgage as is, like we are not changing many things with the mortgage, and we're just looking for the best rate possible, fixed or variable, doesn't matter. And as soon as we find the best rate, we are switching lender for the best rate in order to save money. Refinancing is when you want to completely change whatever was before. Refinancing works very similar to how you applied for the first mortgage, so all documentation required. In general, refinancing is a good option is if total savings overweights the cost of refinance. But sometimes refinancing is just a solution. You have a problem, you're looking for a solution. You want to stretch mortgage, you want to decrease payments. You have high interest loan, you need to pay it out, you want to save on interest. So basically, refinancing, when we are thinking about refinancing, we are thinking not about just save money. Of course, we always want to save money, but here what we are looking, how to find a solution for this specific situation, for this specific family. So when I am using refinancing, I want to make sure that I am helping, I am solving a problem. Okay? So refinancing mainly is not about rates, it's mainly about a solution. Of course, I will look for the best rates, and let me check if I have any questions. If not, I will go and I will. Okay, I don't see any questions, so I can go and show an example. Look, family had a mortgage, everything good. They rate 5.75 for next 2 years. This is what lenders say. Next 2 years, 5.75. Mortgage payment, $1,875.07. Family checked what will be interest cost, $33,479. Why they come to speak to me? Not because of interest rate. They have another problem. They took car loan, and because their credit went down under 600, it was something like 560 or 570 their credit. So they have actually bad credit. Okay, bad credit report, bad credit. They have a really a big problem. And when they applied for car loan and they really needed car, this is what they got: 19% interest on the car. Yeah, you maybe will be shocked. What? Who is buying car with 90% interest rate? You maybe don't want to believe me, but people buying when you don't have a choice, your car is broken. The car is something that you must have because it's part of your job. You buying and your credit is bad. You don't have options. This is what interest rate the bank provided. Actually, all banks declined. They got some kind of not major lender. It was some another lender, and this is what was interest rate. So their monthly payment was more than $1,000 for this car for 5 years. So when I checked, interest cost on this car loan is around $13,210. So what was my solution? I said, I'm going to take your mortgage and I'm going to take your car loan and I'm going to put it together. 300 plus 40,000, 340,000. Now we need money to refinance because you're breaking your mortgage, you need to pay penalty, we need another $5,000. So we added another $5,000 to cover all costs related to refinancing. So we got $345,000. Why it was possible? Because I marked here it was under 80%. What is under 80%? Total mortgage amount must be under or equal 80% from the actual value of home. Value of home was $500,000. 80% from 500 is 400, so we were good. So under 80% we good. It's impossible refinance if you owing more than 80%. Like I had a case, clients called me and their mortgage was like 95%, almost 95, like 94% from the value of home. I can't help them because I cannot refinance in this position. I can only refinance if we have a value of home, value probably of home increase with the time. So if we can prove that value of home and mortgage amount in relations, so mortgage amount is only less or equal 80% from the total value of home. Okay, so because this client has a bad credit, look, the interest rate that I found almost 7%, 6.84. You probably will say me, Boris, what are you doing here? Mortgage was 5.75. Are you going to give people mortgage that more than 1% higher? Yes. Why I'm going to do this? Because as I said, refinancing is not always about the rates, about solution. And let's look on my solution. Yes, you maybe stop to listen at this point and say, Boris, are you crazy? Whoever will agree what they are crazy people, they will agree instead to have very nice mortgage 5.75 to get mortgage that more than 1% higher. Yes, they agreed and they took them. And let's see why. New payment on this combined mortgage, $2,306.71. So instead to pay $1,875.07 plus $1,037.62 for the car, I am saving this family $605.98, almost $606 every month. I'm saving almost $606 every month. I'm saving for this family, and they just have one payment, not some car payments bi-weekly, not another mortgage payment. They have just one time in a month, one clear, simple payment. And it's much more cheaper. I'm saving $605. New interest cost, $43,404. I saved this family in total for these 2 years. I'm not speaking about 5 years. Just temporary. I'm giving them this mortgage just for 2 years. Just for 2 years, they will pay high interest, but they will pay less monthly. And also in total, because of this high interest car, they also saving more than $3,000 they save on interest combined. So they save monthly on payments and they save in total in interest. And it's just for 2 years. They will work with me. We will work. I have a program that I'm calling credit repair program. So I will help these people to repair their credit, fix their credit. They will follow what I am going to teach them to do. They will fix their credit. Now they have extra money that will be saved every month. We will repair their credit. In 2 years, we will apply to normal mortgage, and hopefully interest rates in 2 years will be much less than today, and they will eventually win. They already win. Why? Because instead to pay car for 5 years, I'm put it inside of the mortgage, and they will save a lot of money during this next 2 years. And they will not see car payments, just a big amount of mortgage. Okay, I'm going to pause here, maybe some questions here. Okay, I don't see any questions. Great. So I hope that everything clear. If you have more questions, please don't hesitate to ask. Or if you have personal questions, you know how to contact me. Okay, so how to start refinancing your mortgage? Set a clear financial goal and speak about this mortgage professional. So you know how to call me. We put in your browser Linktree Boris S, and you go and you can contact me via website, via Facebook, Twitter, Instagram. You can contact me via this link. They have option ask questions. You can ask questions through there, and I will reply almost immediately. Clarify with your current lender. What do you need to clarify? You need to clarify your outstanding mortgage balance, your mortgage payment, your mortgage frequency, your interest rate, your current term, when it started, amortization period. Usually all this information you can find in your letters that you get from your lender, from your bank, and current prepayment penalty. It's good to know if you have any penalty, if you need to break. If you're renewing, you don't need to pay any penalty during the renewal period. You're not paying any penalty. And call back to me and I will give you personalized advice. I will do math for you and I will show you if better options available. As I said before, it's always better options available. The majority of customers or majority of clients or majority of Canadians, I don't know why, they strongly believe that because they are loyal to their lender or to their bank or to their place where they currently have a mortgage, so because they are loyal, they will get the best option. It's unfortunately completely wrong. You can Google online, you can go on any website, you can type questions. What is the statistic of Canada of people? Majority of Canadians renewing the mortgage, refinancing mortgage with the same lender, and they are losing a lot of money. Always, constantly, at least several $1,000s. As I showed, first family losing more than $10,000 if they stay with the same lender, and the last family losing a lot of money if they're not refinancing their car. Fixed versus variable. Okay, so when you, we already started to speak a little bit about fixed and variable rates. In general, recommendations. If you good with the risk, if you're okay and you don't worry about changes in the market, go with variable. But if you worry about what is going on in the market, go with fixed. If you're not completely ready to commitment for 5 years, go for 3 years, 2 years fixed. Okay? Now, about penalties. If you break your mortgage and it's variable mortgage, this is how it's calculated. On every $100,000 times 5%, it's in case if your mortgage 5% divided by 4. So approximately your penalty on every $100,000, $1,250 is approximately penalties in case if you have variable mortgage. The same fixed rate mortgage will be approximately $4,000. Again, it depends by rates, it depends by a lot of parameters, but average, this is what will be your penalty on every $100,000. So if your mortgage $400,000, in case of variable penalty, you will have something like $5,000 penalty, and in case of fixed, you will have $16,000 penalty. So again, if you need flexibility, maybe you need to go with variable. If you need flexibility to break a mortgage, maybe you should go with variable. Consider all your goals and plans, and very important to look on spread. So general recommendation that if you go to the bank and bank say, okay, I'm giving you fixed 5.75 and variable 5. This is a spread of 0.75%. It's called okay spread. And if you have this spread, you can relatively safe pick a variable. But if your bank says that your fixed will be something like 5.2 and your variable will be 5 and difference only 0.2, it's not good. Like in today, majority of banks giving difference between fixed and variable rates approximately an average 0.19 difference. It's not safe. So if it's not safe, maybe you should go with fixed for 2 years, maybe for 3, depends by your personal circumstances. And overall market outlook is also important when you decide about fixed and variable rates. Let me check if maybe some questions on chat. Okay, I don't see any questions on chat, so I can continue. What you need to avoid or mistakes to avoid. So majority of Canadians, as I said, not considering refinance or renewal at all, and this is wrong. Majority of Canadians not really looking on future plans, not thinking what may happen in 10 years from now. It's hard to think what may happen, but you need to have some kind of general plan, and you need to adjust your mortgage according to this plan. If you're not checking regularly your credit history and score, you can end as this previous family in my previous example with a bad credit. If you look only on your current lender and you believe that if you will be loyal, you will get better rate, you are wrong. They will not give you the best rate. If you're not shopping around, you will never get a best rate. You don't need to shop around. If you start to go bank by bank by bank and shop around who will give you better rate, first of all, it will take you a lot of time. Second, it will affect your credit report because every bank will check your credit history and it will affect your credit score. So many checks. So in this scenario, it's best to hire brokers. So he will do it for you. So not shopping around. You must shopping around. It will be mistake that if you're not shopping around. Check with your bank and ask your mortgage broker to shop around for you. If you look only on interest rate, you may never will see a solution. As I said, the family that I showed before, I proposed them higher interest rate and overall I gave them a solution. If you choose a wrong term of amortization, you can end with really bad scenario. I know people that took a mortgage for 30 years with variable, but not simple variable rate, variable rate that has a locked variable rate. So what does it mean, locked variable rate? So this variable, in case if rates going up, they're still paying the same payment, but inside of their payments, they started to pay more interest and less equity, more interest and less equity. And now these people ended, instead to have amortization 30 years, now they have amortization 45 years. How they got amortization 45 years? Because inside of their payments, they paid more interest and less equity. So basically, their amortization started to go and increase and increase and increase. So they're still paying same payments and enjoying the small payments, and maybe they're not even triggering the trigger points that when they need to increase their payments, but they may end their term to see, oh, I took mortgage for 30 years. Now when I am renewing, oh, my mortgage now is 40 years. And they will not even be able to transfer this mortgage now. Why? Because majority of lenders work with 30, 35 years. Not too many mortgage lenders working with 40 years mortgages. So please be very careful with term of amortization. When you take out other loans, be careful. When you switch in jobs, before renewal or when you plan refinancing, it can be critical, you may not be approved. If you wait until the end of your term, you are doing another mistake. You can end that you don't have a choice and just take whatever proposed by your bank. So start 6 months in advance, 5 months in advance, 4 months in advance, still okay. 3 months in advance, I will say no problem. 2 months in advance can be already difficult. 1 month in advance, it can be like the last resort, and I will say in majority of the cases it can be too late. So the best scenario is that you will start shop around early and negotiate your fees. Yes, when you're switching and changing your mortgage, you can save money on fees. Ask me how, I can explain. Okay, so example of fees that you can save. You can save on legal fees. Sometimes when I'm helping people to renew mortgage, I'm doing this through certain way so they don't need to pay to the lawyer again. Pay or reimburse the discharge fees. It also can be covered by a majority of financial institutions. Sometimes I can reimburse people for appraisal fees. It depends what is the amount of mortgage they are taking, what is the interest rate, and many other things. So sometimes it's possible to reimburse client for appraisal fees. Sometimes it's possible to reimburse for title insurance fees. So everything possible, you need to speak to the professional, and professional can adjust and find options for you. If you will just do this with a regular your lender, you probably will not be your lender will probably not help you with all these fees, and even if they will help you with some of these fees, you will end with high interest rate and it will not be really good. So they will give you discount here, discount there, discount here, discount there. You will save maybe $2,000 around, but in total, because of their interest rate, you will lose $10,000. So be careful. Okay, again, I would like to see if maybe some questions is around. Okay, hi, I want your opinion. I took 5-year variable clause in March at 1.99. However, as prime increased, my interest 5.24. There is no point in switching as the prime already went up a lot. I cannot give you opinion just based on these numbers because I need more information like about your employment and about any other parameters, but just in general, I say if your interest rate right now 5.24, you have a good rate. Why? I don't see any reason to switch at this point. It's not bad 5.24. What should I do in this case? In March, the fixed was 3.45, but I thought I was still saving money. Okay, so I understand your problem. So your problem in general because of variable rate. Yeah, you from the beginning you decided to go with variable rate, and right now you're concerned about variable rate. If you're still concerned about your current variable rate and you are not, let's say, if you're too worried about your current circumstances because you believe, or what majority of media says, it's probably interest rate will go even higher, so you want to fix it as soon as possible. Let's say you want to fix it now. Okay, so how I can help in your personal circumstance? I can look for something for short term. Okay, because you have a relatively fresh mortgage, so I can look for something like for 3 years. Okay, look, maybe I can get something close to 5.24 for 3 years, and you will have fixed mortgage for 3 years. I don't think like market will be really low very soon. So in general, you already saved some money until today, and if you will get something around 5.24, you maybe will be not in really bad position. But if you think that rates may be going down in a year or two, so it's like I cannot decide for you. Okay, like but what I can do, I can find you mortgage for short period that will be close to 5.24. Again, maybe, I hope so. Right now, the fixed rate is around 6. It's not true. Okay. Right now, if you're asking me right now, I can check right now. I will use my computer and I will check right now what's the best 5 years fixed rate. So I'm going to my computer. Unfortunately, I cannot share the screen because of private information that I have on my computer. But it's not true that fixed rate right now. Yeah, I'm going to check 5 years fixed rate standard, and we want to transfer your mortgage, and I'm going to check the best rate. Okay, so right now I maybe will surprise you, but right now I have 5.04. So right now in this moment, if I had your mortgage application now in my hands, like right now in my hands, and you were saying me, Boris, send this application. If I was click tomorrow Friday morning, bank was getting your application, you were getting 5.04. So fixed rate is not around 6. Maybe in your bank, fixed rate is around 6. But in general, in Canada, the best 5 years fixed right now is 5.04. Okay? Again, I cannot guarantee that I can give you this 5.04 for 5 years. But if you're interested to change your mortgage, if you don't want to worry, if you want to just say, okay, enough, variable rates going up and down, I was believing that it's for me, now I don't believe this is for me, I want it fixed for 5 years, 5.04 is the best rate that I can get for 5 years right now. Maybe you want to close for 3 years, let me check what I can do for you. So I'm going for 3 years and I'm checking. The best rate right now, today, for 3 years fixed, 4.99. So you said mortgage fixed is around 6. No, it's maybe in your bank fixed around 6. I just checked, 7:51 p.m. here in Manitoba. Maybe you're watching me from other province. So today, November 17, 7:51 p.m. Right now, I see on my computer. I can access different mortgage lenders. I can see one of my lenders can give me 4.99 for 3 years. Not bad at all. It's even less than you have 5.24 on your variable right now. Okay, so again, as you are professional, what you take when the rates are coming down, how much you expect them to go up, and for how long, just an idea. Okay, I don't have a crystal ball. I cannot guess what will happen with interest rate. As a professional, I will never say you what will happen to the interest rate tomorrow. Okay, I can say you I have right now for 3-year fixed 4.99, but maybe tomorrow morning I will wake up and this bank will already have not 4.99, 5.4. So I cannot control the market. Okay, how fixed rate going? Fixed rates in Canada going with the market. Like in the market, we have 1 year's papers, 2 years papers, 3 years papers, 4 years papers, 5 years papers, 7 years papers, 10 years papers. So if you want to buy or take mortgage for 5 years, 7 years, for 2 years, you can get whatever mortgage is available on this current specific day. What is advertised by banks or credit unions is advertised on specific day, and they usually keep this rate the same for several days. But through the mortgage broker, you can get much better rate. If you have all documents ready, I can hold your documents and we can wait what is going on in the market. And if you say me, Boris, what is the rate the best for me? I'm saying for you, like for example, 5.2, and you say, no, let's wait. Another day I'm checking for you and say, oh, I see rate 4.98. Do you want me to submit? Say submit. And I'm submitting your application and you will get this rate. So basically what I'm trying to say, if you want to, like, it's like playing with stocks. This is how it works with the fixed rates. So I cannot predict what will happen. Now, if we are speaking about variable rates, it's totally different story. We have Bank of Canada, they have 8 meetings in the year. Smart people sit there and discussing what is the best options available. And they're discussing, and they decide to increase rate or decrease rate. And these smart people announced recently that they are going to increase. Again, it's not firm. They just announced when some journalists spoke to people from Bank of Canada, they asked them, what do you think? What is going on in December? They sit and discuss with journalists and they say, we probably will need to increase more. Why? Because we believe it's better for inflation. I cannot say, as a professional, I am a professional mortgage broker. What is my professionalism? I can get you the best rate that will be available for your mortgage application. This is my professionalism. Suggest you what to take variable or fix it? I will never do it. I can give you general recommendations about what is going on, but I cannot do specific. I am also in Winnipeg. Is your office also in Winnipeg, Manitoba? Yes, my office in Winnipeg, Manitoba. You can give me a phone call again through my link, Linktree Boris S. Go on my link. You will find all information about me. You can give me a call tomorrow morning, and we can look on your. If you want to do application, I will be more than happy to help. Okay. I hope maybe somebody else wants to ask any questions here. I can see that we have several viewers still left. I will just wait for another minute, maybe even less. Yeah, so as I mentioned at the beginning, I am a mortgage professional who works across all of Canada. My office in Winnipeg, Canada, but I'm doing mortgages across all of Canada. We have options for this and we can lend anywhere in Canada. If you have any concerns or questions regarding your current mortgage situation and you want to look and or try to apply for any mortgage, you're more than welcome. And I believe I will end this meeting. Thank you very much for everyone who participate, and have an amazing evening and have a wonderful weekend.